The markets are closed, but the business stories are just heating up. Hello, I'm Robert Tan. Catch up with us on Business Brief. Asian shares rallied on Tuesday after China cut key interest rates as part of its effort to fend off malaise worsened by the trade war. The China's central bank slashed its loan prime rates for the first time in 7 months in a move welcomed by investors eager for more stimulus. This as the country feels the pinch of higher tariffs of U.S. President Donald Trump. Japan's Nikkei 225 rose by 0.48%, while Australia's ASX gained 0.59%. Hong Kong's Hang Seng led regional gains with more than 1%. South Korea's Kospi edged up 0.11%. Indonesia's Jakarta Composite Index climbed 0.43%, and Taiwan's TAIEX is flat with a slight uptick. India's Nifty 50 was the lone outlier, slipping nearly 0.1%. And in the currency market, the US dollar showed mixed performance against major Asia-Pacific currencies. The dollar weakened against the Japanese yen, slipping 0.24%, and also lost ground against the Australian dollar and Thai baht, down 0.34% and 0.17% respectively. It dipped nearly 0.1% versus the Singapore dollar. Meanwhile, the greenback is flat with a slight uptick against the Hong Kong dollar, while the dollar is up by almost 0.1% against the South Korean won. Gold prices, meanwhile, edged lower by 0.43%. In the oil market, West Texas Intermediate crude is flat with an upward bias, while Brent crude slipped 0.26%. Dubai crude also dipped slightly by less than 0.1%. Meanwhile, cryptocurrencies saw gains, with Bitcoin rising 0.63% and Ethereum climbing nearly 2%. U.S. President Donald Trump signs into law the Take It Down Act, a sweeping measure that criminalizes non-consensual explicit deepfakes and sets new standards for online content moderation. The law targets intimate, AI-generated videos shared without consent and requires social media platforms to build fast-track removal systems or face penalties. Tech companies will now have to invest in new detection tools and response protocols, potentially adding compliance costs and legal risk. First Lady Melania Trump, who has advocated for digital safety initiatives, joined the president at the signing ceremony in the White House Rose Garden. The law marks a significant shift in global tech policy, possibly setting a regulatory precedent for how AI-generated content is handled across digital platforms and influencing future laws in Europe and Asia. Meanwhile, Brazilian authorities are trying to determine whether a bird flu outbreak among wild birds in a zoo in southern state is connected to the country's first bird flu case on commercial poultry. An agriculture official said the genetic sequence of the virus that killed around 100 waterfowls at the zoo in the town of Sapucaia do Sul would confirm this. 17,000 chickens have already been culled because of this. The Philippines has imposed a temporary ban in poultry imports from Brazil due to the outbreak. Meta Platforms Philippines unit is taking its tax dispute with the Bureau of Internal Revenue to court in a case that highlights growing scrutiny on big tech's operation in emerging markets. The company filed a petition for review before the Court of Tax Appeals last April. Meanwhile, details of the assessment have not been disclosed. The case could have wider implications for how tech giants are taxed in the Philippines. Meta's local office, based in a tax-incentivized zone in Taguig, handles sales and advertising support services for the Philippine market. Under Philippine law, companies may appeal to the CTA if the BIR issues a final decision on a disputed assessment or fails to act on a protest within a set period. Meta's presence in the country is massive, with Facebook alone boasting over 102 million users last year, making the Philippines one of its biggest markets worldwide. The case comes as authorities around the world, including in Southeast Asia, move to tighten tax rules for digital platforms operating across borders. Taiwan's Computex Tech Show opened in the capital Taipei on Tuesday. It's bringing together thousands of participants from across the globe with advanced artificial intelligence technology and robotic systems on display. It is the first major gathering of the computer and chip executives in Asia since U.S. President Donald Trump threatened to impose sweeping tariffs. CEOs from NVIDIA, Foxconn, Qualcomm had announced their latest business strategies on the sidelines of the exhibition to woo new partners and suppliers. The leaders of the United Kingdom, France, and Canada warned they may impose sanctions on Israel if it fails to halt military operations in Gaza. The warning comes as indirect talks between Israel and the militant group Hamas began in Qatar over the weekend, a diplomatic move seen as a possible path toward de-escalation. Despite that, Israel continued its ground offensives in Gaza. The Israeli government says it will allow a basic amount of food into the strip, but a United Nations official says that's not enough to avert a humanitarian crisis. The heightened tensions are being closely watched by global markets, especially as potential sanctions and escalation in the region could further affect oil prices, supply chains, and defense spending. Yemen's Iran-backed Houthi rebels claim to have imposed a maritime blockade on Israel's northern Haifa port, further escalating regional tensions amid the conflict in Gaza. The group says the move is a direct response to Israel's continued military operations in the Palestinian enclave. A Houthi spokesperson adds that the Haifa port is now formally included in their list of targets. The Houthis have previously launched missile attacks toward Israel, though most have been intercepted. While the scope of the so-called blockade remains unclear, global shipping watchdogs and investors are closely monitoring the situation, with potential impacts on trade routes through the Red Sea and Eastern Mediterranean. Any disruption in these corridors could pose risks to supply chains, shipping, insurance, and energy transport across the region. World leaders and markets are watching closely as the Vatican emerges as a possible venue for Russia-Ukraine peace talks, a development that could ease global uncertainty if it materializes. The move follows a statement from U.S. President Donald Trump, who said Pope Leo XIV has expressed interest in mediating between Moscow and Kyiv. The Vatican has not yet confirmed any formal role, but the Cignal has already drawn support from France, Germany, and Ukraine, who held talks with Trump after his call with Russian President Vladimir Putin. Italy also welcomed the possibility, calling the Pope's involvement a positive signal amid hopes for de-escalation. Pope Leo earlier said in his inaugural address that the Vatican stands ready to mediate global conflicts. Investors are monitoring these developments closely, with any progress towards peace likely to ease pressure on energy prices, defense spending, and supply chains, particularly in Europe. We're taking a short break. The biggest business stories from around the country are up next. You're watching Business Brief. Back on Business Brief, AI's rapid rise is reshaping global energy demand and testing Asia's power strategies. From Taguig City, Sujin Kim has more. Go ahead, Sujin.
Robert, worldwide power consumption driven by artificial intelligence is expected to increase by 4.2 times by 2028, according to energy management company Schneider Electric. Industry leaders warn that daily digital activities such as searches and AI processing could add up to 10 terawatt-hours of electricity usage annually. This demand surge is straining existing infrastructure and requiring reconfiguration of data center strategies. In Asia, 48% of businesses consider energy price volatility as a significant operational risk. In the Philippines, electricity remains more expensive compared to regional peers such as Indonesia and Vietnam, citing multiple pass-through charges and the lack of energy subsidies as critical concerns. According to Energy Regulatory Commission Chairperson Mona Lisa de Malanta, the ERC has implemented a series of regulatory reforms to improve transparency and reduce costs, such as the retail aggregation program that generated 18.57 billion pesos in savings in 2024 alone. Meanwhile, the Securities and Exchange Commission Commission is pushing for green capital alignment through a series of policies including guidelines on green, social, and sustainability or GSS bonds and the draft Green Equity label. Mandatory sustainability reporting will be phased in starting 2026 for listed companies, followed by mid-cap, small-cap, and large non-listed entities by 2028. As of February, the Philippines ranks third in ASEAN for GSS bond issuances with a total value of $15.32 billion or 27% of ASEAN's regional issuances. And those are latest updates from Taguig City. Back to you, Robert.
Thank you for that report, Sujin Kim. Meanwhile, President Bongbong Marcos blames smuggling and spoiled government officials for the delay in the implementation of its 20 peso per kilo rice program. During his Monday podcast, the president said there were officials who kept importing rice. Some of it were legal, others were illegal. But Marcos did not identify them or which agency they came from. The president vows to continue working on boosting local rice production. The Agriculture Department is moving to stop traders manipulating prices by exploiting farmers during harvest. In several Luzon and Mindanao areas, buying prices for palay plunged to just 13 pesos per kilo, well below the 18 to 24 pesos per kilo of clean and dry palay set by the National Food Authority. Secretary Francisco Chu Laurel says legal action is being studied, including a possible floor price to shield farmers. He points to international models like India's for best practices. The DA has flagged 32 low-price hotspots and vows stronger palay procurement in the areas next season. Transportation Secretary Vince Dizon announces that the EDSA overhaul will start by mid-June. Dizon had said the rehabilitation will take about a year and a half, as he admitted that it will cause heavy traffic along the main thoroughfare. The Department of Transportation is also in talks with San Miguel Corporation to suspend toll collection in parts of the Skyway while the EDSA rebuilding is ongoing.
Simula na yan, kasi nga, sabi nga ng Pangulo, 45 years na ba bago talagang inayos ang EDSA. Kaya nga, ang tatawagin na nga namin dito, hindi na EDSA rehab EDSA rebuild na. Kasi build better more na ito Ito talaga ang isa sa mga pinakaklarong ehemplo ng build better more. Dahil alam naman natin, ang dating kinagawian, patsi-patsi, reblock, rehab. Ito hindi ito rehab. Rebuild na talaga ito ng EDSA. Total rebuild. Babaguhin na natin ang EDSA. Mahirap siya habang ginagawa, pagka-traffic, may perwisyo, pero pag natapos ito, talagang napakalaking ginawa nito para sa mga kababayan natin.
Trade Secretary Cristina Roque rallied Asia-Pacific nations to close digital gaps and protect global trade rules. Speaking at an APEC ministers meeting in South Korea, she urged the group's members to harness AI responsibly, cut red tape, and guard against supply chain risks. Roque also pushed for reforms on the World Trade Organization's dispute settlement mechanism and tighter cooperation on data privacy and cybersecurity. Two of the country's biggest broadsheets are scaling back operations. Bilyonaryo Yap family's Manila Bulletin stayed in the black by cutting 55 million pesos in printing and operating costs. This after sales and ad revenue slipped during what's usually a strong election season. Meanwhile, Inquirer.net, the digital arm of Bilyonaryo Prieto Rufino family's Philippine Daily Inquirer, takes over publishing from the print news desk effective July 1. Dozens of editorial jobs are at risk. Management promises lawful separation benefits, but for affected staff, it is a major turning point for traditional newsroom. Reuters Institute reports that only 13% of Filipinos still read print, while 82% gets their news from online sources. The Philippine balance of payments deficit widens in April, highlighting the country's vulnerability to capital outflows amid global uncertainty and debt servicing pressures. Data from the Bangko Sentral ng Pilipinas shows a $2.56 billion deficit for the month, 4 times larger than the $639 million gap recorded in April last year. The balance of payments, or BOP, measures all transactions between the Philippines and the rest of the world. A deficit means more dollars left the country than came in, usually through imports, debt payments, or capital flight, while a surplus indicates net inflows. The BSP attributes April's sharp deficit to the national government's external debt payments, underscoring the impact of public sector outflows on the country's external position. Economists say sustained BOP pressures could weigh on the peso and influence future monetary policy, especially as markets monitor U.S. rate signals and regional capital moves. Philippine borrowing costs shift as global credit risk ripple through local debt markets. The 91 and 182-day Treasury bills fetched lower average rates of 5.52 and 5.61%, down from last week's 5.55 and 5.65%. But the yield on the 364-day T-bill rises to 5.70%, up from 5.65% last week. RCBC Chief Economist Michael Ricafort says the uptick in longer-dated T-bills may be partly due to the recent downgrade of the U.S. credit rating by Moody's, which pushed U.S. Treasury yields higher. Since global bonds are priced off U.S. Treasury benchmarks, higher yields abroad can raise funding costs for other governments, including the Philippines. Economists say the shift highlights how local borrowing conditions remain sensitive to global shocks despite cooling inflation and possibly more policy easing ahead. And we're taking a short break. Business Brief will be right back. The Bangko Sentral ng Pilipinas warns the public against fraudulent job offers that illegally use the image of BSP Deputy Governor Chuchi Fonacier. The BSP says it has received reports of unsolicited messages on Viber using Fonacier's photo to promote fake jobs with false promises of daily earnings ranging from 500 to 5,000 pesos. The central bank reminds the public that all legitimate BSP job vacancies are posted exclusively through its official website and verified social media accounts. Authorities are urging the public to be vigilant as online scams continue to exploit trust in institutions using high-profile names to lure victims. The Senate Committee on Ways and Means pushes for higher excise taxes on vape and tobacco products, framing it as both a fight against smuggling and a move to protect the youth. Committee Chair Senator Sherwin Gatchalian says the proposal comes amid rising vape use among adolescents and a surge in illicit tobacco trade. He rejects the notion that lower taxes would reduce smuggling, saying stronger taxation and enforcement are crucial to curb the black market and safeguard public health. Gatchalian is currently leading deliberations on House Bill 11360, which seeks to amend the National Internal Revenue Code by imposing a 41 peso tax per pack of heated tobacco products and 66 pesos and 15 centavos per milliliter on vape products. Lawmakers say the measures could strengthen revenue collection while addressing health risks and cross-border smuggling, a growing concern as cheaper, untaxed products enter the Philippine market. After 3 months of strong gains, the Philippine auto market hits a speed bump in April, with sales dropping across nearly every segment. Is this a monetary dip or a sign that headwinds are building for the industry? Our mobility correspondent Gib Baroga reports.
After cruising through 3 strong months, the Philippine car market hit a bit of a speed bump in April. Just over 33,500 units were sold during the month, down from more than 40,000 in March. That's a 17% drop month-on-month and 10% lower than April last year. A joint report by the Chamber of Automotive Manufacturers of the Philippines and the Truck Manufacturers Association shows that passenger cars took the biggest hit. Sales fell by 23% from March and a steep 35% compared to the same month in 2024. Commercial vehicle sales also slid, with a little over 27,000 units sold in April, about 15% lower than March's numbers. The dip extended to Asian utility vehicles and light commercial vehicles, each segment showing the same downward trend. Even the usually buzzy new energy vehicle segment wasn't spared, dropping by 20%. only 1,509 units were sold in April, down from nearly 1,900 the month before. Hybrids still led the charge in this category, followed by battery electric vehicles and plug-in hybrids. Industry groups point to a mix of reasons behind the slowdown, from seasonality and economic conditions to shifting buyer behavior. And despite April's weak performance, the local auto industry still racked up over 150,000 units sold so far, a 3% increase compared to the same period last year. Toyota Motor Philippines of the Bilyonaryo T family continues to lead the pack with a commanding 48% market share, with almost 72,000 cars sold in just the first 4 months.
But it's not all gloom and doom. While April may have put the brakes on the industry's momentum, automotive leaders remain in gear and keeping a close eye on trends as they steer toward the rest of the year. For BNC Mobility, G. Baroga.
Philippine shares returned to the 16,300 level after falling in the second trading day of the week. The PSE index closed lower by nearly 2% to close at 63.35, finishing the day as the worst performer in Asia. All sectoral indices ended in the red, with the services falling the most at more than 2%. Decliners outpaced advancers 126 to 62. Total value turnover reached 7.3 billion pesos. Majority of the day's most active stocks ended in the red, with ICTSI falling the most at nearly 4%. Meanwhile, at the foreign exchange market, the peso is currently trading at 55.68 against the greenback, weakening from previous close of 55.67. And that's a wrap for today's Business Brief. I'm Robert Tan. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business. Only here on the Bilyonaryo News Channel. See you then.